All right, folks, Dr. Keith here. Happy Wednesday afternoon for most of you anyway. Hope you're all doing well. We'll get started here in just a couple minutes. Looking forward to sharing some information with you all. Feel free, if you don't mind, somebody can just type in the chat. Hi, Robert. If you can see my slides okay and hear me okay, that'd be great. Obviously, I don't want to talk to myself. You should be able to see the slides. It says seasonal trading, futures, forex, and stocks. And hopefully you can hear me loud and clear. Perfect. Okay, so I'm gonna go over some educational content, but the main purpose, and I'm gonna start doing this more, is doing some of these free webinars where I just kind of show you some data, that I'm looking at, some trades that I like to get you comfortable with different scenarios. Okay, so first and foremost, and those of you that end up watching the recording as well, feel free to pause this and read this important notice. Bottom line here is you should never trade money you can't afford to lose, folks. And talk to your financial advisors if you have questions on that. Okay. All right. Okay, so I'm not going to go in too much about myself today. That's not the purpose of today's presentation. But again, you can always go back to the recording, pause it. Bottom line is I've got a lot of experience in trading the markets, teaching the markets. It's what I do for a living. It's what I've been doing for a living for many years now. And basically, I trade based off of high probability setups. Okay, everything I trade, I know that there's an edge. It doesn't mean they're all gonna work out, right? Nobody wins every trade, but every trade I take has a huge statistical advantage that is going to move in the direction that I'm looking for. Okay. So I'm going to get right to the meat and potatoes here, and then we're going to have some sort of even an open session as well. Okay. So again, after the webinar as well, feel free to email me any feedback, but I want to do a little bit more of this. And kind of keep you all engaged in what I'm looking at. So this is a seasonal sweet spot that I wanted to share with everybody. And basically what this is telling you, this is the ES, right? The S&P basically, folks. So no matter how you trade, if you're an option play, right, you can look at the spiders, the SPX. If you're a futures trader, the ES, right, the mini ES. But I just want to show you some incredible data. Okay, so since 2003, and I'm going to walk you through this. Okay, again, this is on the ES. In fact, let me make that a little bit brighter color for you. That'll probably be easier. So on the ES, the last 15 years, okay, entering 11/21 for the most part. When you see a couple dates that aren't 11/21, it's because it was the weekend. Okay. So basically entering, for example, tonight, folks, right? Because the opening of Thursday's trade starts tonight, right? Okay, just by, and I'm not recommending this, by the way, folks, okay? I'm just showing you some data. I'm going to show you some trades that I will take, okay? But this is not a recommendation, okay? Because just going in at a specific date, right? I mean, you've got to really have faith in something. A lot of you don't even know me that well yet, right? Okay, Robert. Yeah, Sisters, that's a beautiful area. We may move there. Yeah, excellent. Okay, so but what I want to show you is the incredible statistics on this trade. Okay, so entering on 11/21 and then exiting on December 6th, and most times, again, depending on the weekend, it's a day or two earlier. Okay, so roughly 12 to 16 days. What I'm getting at is the next couple weeks, right, folks, were extremely bullish, right? So last year, 2018, by doing that, best means this is the most money by entering that criteria, one contract on the ES, you would have been up at $1.7 thousand. The worst you would have been underwater is $975, okay? So again, that's amazing, right? We'll all take that risk reward. But what's cool about this is one contract. And the cool thing is now you can trade the micros, right? So you don't even have to risk for smaller accounts. You don't have to risk your account here, which obviously I would never recommend trading more than 2% of your account balance. But look at the worst here. 1 year you were down $1,800, okay, 1,600. But for the most part, you're not taking a whole lot of heat on this just by entering tonight, okay? Again, I'm not recommending, I'm just showing you the incredible data here, okay? And this is the profits that you would have made by closing on those dates, okay? Now, even though I data mine this and I've got this data, this is not how I trade, okay? I won't just get out on December 6th, okay? I will get out when based off my trading system. So I want to make that clear, but I just think this is phenomenal data to be able to share with you. So my point is, over the next couple of weeks, I don't care what you're watching right now on MSNBC. I don't care what Kramer's going to tell you tonight. Okay, I don't care about the trade wars. What I'm telling you is, over the last 15 years, the next couple of weeks are extremely bullish, right? Through Thanksgiving, through end of next week, basically, and a little bit more, right? So does that mean we can make money on the short side? I'm sure you can. My point to this, and the main reason I wanted to even hold this webinar for all of you, look for longs when you get your signals, okay? Obviously, if you're using my alert services or my mentorships, I'll tell you when. But you all have techniques, no matter who's taught you, okay? Look to be bullish, not bearish. Pardon my French, but screw the news, okay? This is telling you, it does not a guarantee. It doesn't mean it's going to work out. But again, if a broker called you up and said, you know, hey, Robert, hi, Nadine, hi, Al, over the last 15 years, this is what's happened, you know you would be in it, right? So again, I'm just trying to show you some data to help you make decisions, okay? Yes, I'm getting it. Somebody's saying Jackie's sound. You can all hear me, right? Just type a Y in the chat if you can hear me. Okay, thanks, Chris. Perfect. It might just be her speakers. Okay. And again, I am recording this and we'll send it out, okay? So again, this is what I do for a living. I look for these type of advantages, okay? And we're going to go to live charts in a few minutes and so forth, okay? But I just want to show you, these don't come along all the time, okay? So if this doesn't work out this year, in my opinion, it's still worth a try for me, okay? And again, I'm not going in publicly, I'm not going to tell you just to go in tonight when the market opens up tonight, okay? Because some of you may take too much heat. You know, right now the market was heading down because of trade war news, right? So why am I excited about that? Because what it's going to do is eventually give me a better entry point, right? Those of you that follow me know I've been saying for a month now we're going to continue to hit new highs, right? And I'll show you a slide in a minute, a couple reasons why. Okay, but I've been wanting a retracement. And what I said last week was, man, I hope Monday, Tuesday, or Wednesday of this week, we have a little bit of a retracement because our really bullish time is coming. And I hate being right at highs, right? Because a lot of goofy things happen at highs, right? What happens is a lot of people are taking profits, which are the professionals, by the way, taking your money. And then a lot of other traders, retailer traders, are getting stopped out at highs because they've been shorting it, okay? So I don't love that we were right at highs, and now we've had a retracement today, so I'll look for a good entry, and there's more room for the upside now, okay? So this is working out ideally for me, but I don't recommend just catching a falling knife, right? You've all heard that term probably, meaning when the market's coming down, just don't get in. Use your indicators or my alert service or my indicators to get an entry off a smaller time frame, okay? What I'm going to do, and I'll show you in a few minutes, is I'm just going to look for a turnaround off a smaller time frame as my entry point to get into this particular trade, okay? So there's a lot of ways of doing it. All right, let me show you another slide here. Okay, so this is, I want to be more specific. This is a little bit longer term trade till the end of December almost, December 27th, okay? Call it a seasonal sweet spot. So those of you who like to trade options as well, okay? You could do an SPY trade, right? Or an SPX or whatever it is that you like to trade. Okay, right here, SPX, let's say, or SPY. And basically, again, since 2003, if you got in right about now, right, when we get a trigger tonight, and you stayed in right before Santa, right? Right before Santa, or right after Santa, I should say. Right around that time frame. Okay, this was a December 27th expiration on the option side. Okay, the actual exit date from the data mining is before Santa. Okay, before Santa. I've got 3 kids that are 12 and under, so in case they ever listen to this recording, and this is just as pre-Santa, right? This is pre-Santa getting rid of this particular thing. And what this can do is help me buy my Christmas presents. That's my goal. Okay. But anyway, so this has worked out since 2003, every time except 2 times. Okay. And I actually didn't have a trigger last year, but in 2015, I did. Okay. So I got burned once on this in 15 years, and that's trading. But again, you can see just from the data mining standpoint, right? The different profits, number of days, the best date. Okay, so again, this is just data mining telling you that when you entered and you exited, what your profits were. In this particular time in 2017, it was kind of cool just off the mining because you basically closed at the most profits that you could have taken. Okay, and that won't always happen. Okay, but again, I just want to show you there's ways to play these sweet spots. Okay. Yeah, so let me back up a slide. There's a question. This slide is easier to see that. So if you're looking at something like this, you're like, well, when would I take profits? Okay. What I like to look at is what is the average profit? Okay, so what you can do here is add these up, divide them by the number 15, right? And get your average profit. Okay, that's one way of doing it. Okay. The other thing is for your stop loss, again, it's all based on what you're comfortable with. And if you trade the micros, right, these are all going to change based off the micro contract now. But, you know, in this case, I'm comfortable with putting a $2,000 stop because over the last 15 years, it wouldn't have hit it. Okay. Again, the odds are so high, folks. So I'm going to try to get 2,000. But if I'm up $1,500, I'm definitely going to take some profits or move my stop. I'm never going to turn a winner like that into a loser, right? You've got to manage it. You've got to manage it a little bit, okay? But a lot of this will be made typically when you're sleeping, right? That's the cool thing about the futures, okay? We all know when we're sleeping, we can't screw up a trade, right? We've all been there. We've all been there. Okay, so when I mentioned that we had a couple things in our advantage. We had a seasonal advantage in the stock market, and I'll show you that on a live chart here in just a couple minutes. Basically showing that the markets head higher typically until the first week in December, roughly. We get a little bit of a pullback, then it rockets higher again, okay? But November is a pretty bullish month in the markets. So that's why we've been hitting all-time highs, because the economy, everything based off of, let's call it the VIX, okay, has been normal, right? I think you all agree with that. If you look at the chart of a VIX, right, volatility's been low, which means things are running normal. Seasonal plays are the best when there's normalcy, okay? In an individual stock or in a market, or futures or a forex, what I look for is normal. So if all of a sudden, I get this question all the time, well, Dr. Keith, if you normally are, a lot of yours are bullish moves in stocks anyway, what happens when all of a sudden volatility spikes? You take all those long plays in seasonality. The short answer is no, not when things aren't normal. I'm on the sidelines, and I would rather be on the sidelines and make nothing. Again, I trade all markets, so I just go into futures and forex, okay? But I would rather make no money in something that's not acting normal than lose money like what happens to most of us, right? Then when things normalize again, I go right back in. Okay, that's how you consistently make money, folks, in the market. Okay, but over the last 6 weeks, retailer traders, which is probably most of us on this webinar, okay, retailer traders have been short the markets over 80% of us. Okay, at one time it was 87% of us. So again, when you go back and you look at your chart on the ES or the Spider or the SPX, right, we've been hitting new highs. Again, why is that? This is very important, okay? And I'm a retailer trader, okay? I just finally figured it out years ago of following the big boys, okay? When there's an extreme short position on retailers who are almost always wrong, unfortunately, okay? That's a bullish signal, okay? So that's bullish. We also have seasonality, that's bullish, okay? Those two combinations are incredibly powerful. So any sort of pullbacks we've been getting are fantastic buying opportunities. I was talking to a client yesterday who's a bear, and he keeps getting stopped out. And when I just show them this data, I said, listen, there's nothing wrong with being a bear. There's times he should be a bear. But again, for whatever reason, retailer traders like to pick tops and bottoms, folks, okay? So if you're one of those, don't think you're alone, okay? Again, from over 12 years of research, talking to people, mentoring, that's very normal, okay? But go with the flow, go with the trend. Don't watch the news, or if you do, use that as a contrarian indicator, okay? If you remember 3 years ago at Christmas time when Bitcoin was going to go to 50,000, at that point, I remember telling my wife, okay, now it's all over the news on Bitcoin is going to continue higher. People are taking mortgages out on their home. We're probably very, very close to a top, and then it crashed that next year, right? And it's headed back up now. It's coming back down. But my point is, when you have an extreme, use the news as a contrarian indicator, okay? That's exactly what it is. You know, think about if you look at a chart on oil, right, whether the USO or the oil futures, when we had that issue, 6 weeks ago with the bombing, it gapped up. It was on a weekend. It gapped up on that Monday, if you recall. And that's when I knew what professionals were thinking. And you'll look, right from there, it went down. We had retailer traders were extremely bullish crude oil, and we had a seasonal short brewing, which meant with high probability, we were going to get a retracement to the downside in oil. Okay, so that's some of the things, again, that I also give you in the alert. Okay, so let's talk about this, though. I mean, if you have any questions, type them in, and as I get some breaks, I will answer them. Again, I'm going to have part of this as a working session. This isn't all going to be teaching. All right, let me go to the next slide here. Okay, so what I'm going to show you now is, let me bring over my screen. You should all be able to see my Thinkorswim screen. And what I'm going to show you is, I'm just going to bring open some recent trades I did, because again, I want to show you big picture what I look for, okay? And basically, this is my off a weekly, this is my seasonal indicator, okay? I'm not going to go in a lot of detail today about my seasonal indicator. You can always go to the website, and I have one that's more detailed I did a couple of weeks ago. Again, today the purpose is more of a information session to show you some things, give you some ideas, okay? But the bottom line is this white line, which is going to mirror this orange line right here, is current price, okay? So for DICS, once we get into the middle of December, look at that seasonal long play, okay? Well, we've been in a seasonal long, though. So let me back this up and show you. So right here, 1014, we typically had higher on DICS, okay? This is the weekly, okay? We have a slight pullback coming, and then it heads higher. So when I had a trigger right here on DICS, here's my trigger. Again, I'm not going to go over all the specifics of my triggers right now. That's not the purpose, okay? And then here is a re-entry, okay? So you could have got in here, or you could have got in here, okay? And the way I do my spreads, I like to do debit spreads. I like to get a 50% quick hit profit and then get out on most of my trades, 80% of my trades, okay? And so anyway, this was a recent winner on DICS. And you can see, it doesn't have to be a huge move, folks, to get that 50% profit based on how I trade. Okay. Yes, I also do straight calls. I look for home runs. Okay. But 80% of my option plays are spreads because you're using seasonality and this phenomenal trigger on the Laguerre modified RSI to get these moves in the direction of the seasonal with high accuracy. Get your 50%, get out, go to the next trade. Okay, that's how you build accounts. That's how you build accounts. Okay. All right, so that was one recently. All right, CN's another one. So again, let me just kind of walk you through this. So you can see here, right here is current price, okay? We're basically at a seasonal long. See that steep move up until February on Sienna. And I have it set, folks, this is, again, a weekly. My seasonal is a weekly. I have it set to a 10-year seasonality. I can adjust that to whatever I want with a click of, just one click up here, okay? I use a 10-year as the most accurate that I found through all the testing, but you can always change it to a 5-year, a 15. If a stock's been around 20 or 30, whatever you prefer, I use 10, okay? But anyway, so again, once I had the trigger here, right here, got in, got my percentage, got out, okay? I also did a longer play on this, okay? This is a longer play right here. This was a straight call in this example because I want to take advantage of this longer term move, okay? More than likely over the next couple weeks, Sienna will continue higher now, okay? High probabilities. And I'll be able to make a decent profit on that again, okay? Those are just some things I look at. Broadcom, again, folks, look at this. Look at this. We basically come up, we hit a bottom in October from a seasonal perspective, and then look at October all the way up till, this is until March, okay? So this is Broadcom. Why would you want to short that? Okay, anybody wants to short that, again, I don't think those the odds are with you, okay? So what happened? Right in October, we got a trigger right here. Meeting, this is a perfect trade because of the Bollinger Bands that I teach, okay? But look at that beautiful move up. My point is, just knowing this, looking for any trigger you want, whether you use your, a stochastic, an RSI, whatever you use, certainly I have found improvement over the years. This is my best oscillator I've ever used. But whatever oscillator you use, if you know there's a seasonal advantage and you take the trigger only in that direction, right? So as a learning, you get a seasonal, not a seasonal, you get a trigger short here, right here, okay? Maybe you could have made a little bit of money, but why would I ever do that? And I don't, okay? I love to see these for retracements, then you can take the curve to go long again, okay? Again, I know I'm going a little fast. I just want to get through this and get into some live trades that I'm looking at, okay? So here is an example, those of you that trade futures. Okay, again, when you're looking at lean hogs here, couple things. Let me show you the seasonal first, okay? So again, what this is telling you right here, we're bottoming in December, start of December on lean hogs, right? So that's what I look for now, okay? And we're heading much higher. You see this green? I won't go into all the specifics of this. This means I want to go higher, all right? That's exactly what that means. So specifically, we get another great long in March, but from mid-December on, lean hogs to the long side, okay? Now, an alert service that I have, we made money on this trade right here. It was a quick trade, okay? We got in here, and it hit profit target 1 here. It never hit profit target 2, and then it came back and stopped me out on my remaining contract. Okay, but I made money on 1 contract here. Okay, so they're not always going to be, these huge moves with seasonality. But again, I had an early trigger, and I like the move. Now I love that we've come back down, because I want it to go sideways for a little bit, and we'll look for a nice entering going into December, right? So this is a beautiful looking setup here, folks, on many reasons, and just look forward to waiting for the triggers, right? There's no trigger now at this point, so I am waiting. So Al asked a great question. Basically he's saying, if I'm tracking the last 10 years of seasonal data, okay, well, we've been in a bull market during the last 10 years. So that, right? And you're absolutely right. So we're going to take advantage of those moves in a bull market, okay? Now, the stock market, if you look at a chart from the stock market, and what's always fun to do since the year you were born, okay? We've been in a bull market our entire lives. Yes, you're going to have a year or two's down moves. Absolutely, right? We want those, okay? But during those down markets, we're not going to take seasonal longs. We're going to look at the seasonal shorts. There's plenty of stocks that have seasonal shorts, okay? And again, I don't want to get too technical today. That's not the purpose, but let me show you how I know that, okay? So one of the things that I have on my indicator here that I look at, okay? Right here is current price. Okay, let me draw a picture for it. Right? This red and green line is current price. So we're here right now. Well, you're like, well, what the hell is this white dotted line? This is the seasonal pattern over the last 10 years it's been following. Okay? So it tells me that right here, we were stronger than the seasonal, and then we got back to normalcy. It came down as it should have from the seasonal. Okay? So if I'm looking at a stock, for example, though, let's say the seasonal pattern goes like this. Okay, but let's say this year it's been going like this, and let's say right here is the entry date. Am I taking that? Am I taking that seasonal long? No. Why? It's not mapping. It's not mapping to this year's seasonal pattern. Okay, and I have a lot of short seasonals that play in. I'm not taking those right now because I'm much more bullish. But if we kick into a bear market at some point, then I'll look to take just the seasonal shorts, okay? So to answer your question, I am not going to take a seasonal long if the market conditions aren't exactly what I'm looking for. Great question. Thank you for asking that, because I'm sure many had that question. All right, and here's another beautiful trade on bonds. And the nice thing about bonds, whether you trade the TLT, okay, whatever the situation is, or the ZB and Thinkorswim for the futures, or the ZN, which is the 10-year, okay? And this is a beautiful trade right here, okay? This thing from 1113 to 1128 over the last 20 years has been higher 88% of the time. And what I liked about this, folks, is we had this bottoming factor happening, right? And then I had my trigger right here. So again, I didn't just go in on 1113, folks. I had a trigger. This was about as good as it gets, knowing the data mining behind that, okay? Again, that's exactly how I trade. That's exactly how I trade. That's why I wanted to show you some recents, just some recents, okay? Okay, so let me just flip back to the charts for a minute. All right, a lot of you will ask, and those of you that are members will see this in the members area and that, but I launched my company. I was working for another company, and I'm not allowed to publicly put that out there anymore. But since the October launch of Seasonal Trader Pro, on each market, I just want to show you the progress. That's a logical question, right? So on the forex, I'm up 135 pips. The last 2 weeks have been slow. Only, I think, one trade. But my point to that, folks, those of you that trade forex, all that's showing you, it should show you, is my discipline. Okay, and the reason why it's slow is a lot of trades that have been triggering has been against the seasonal pattern that I'm not interested in right now. Okay, but regardless, since October, up 135 pips roughly. Okay, Futures, just one contract, I'm up $4,800 with one contract, okay? Options, again, that was harder to kind of show you, but I have like 4 open trades right now, okay? But 9 are closed, 7 were winners, and my winners are typically 50% based on my strategy, okay? And then my losers are going to be roughly the same. One loser was 60%, and then another was, I think the second one was, gosh, I think it was 70%. But I usually try to keep it 50-50 so that if you're winning 8 out of 10, you're going to go like this with your equity curve, okay? And again, those of you that are members, you see that in the member area there. Okay, so let's get to some more good stuff here. All right, so let me show you now some of my favorite trades coming up. Again, I'm waiting for triggers, and I can't specify that enough that I am waiting for triggers. So here's one for Adobe, okay? So Adobe, November through March, I look for longs only, okay? November through March. So we had an early trigger here, and I'll go in 2 weeks early on a seasonal move, okay? Now, I didn't here on Adobe because we were in this massive downtrend, okay? So I didn't want to go in early. That's one of my rules. If we would have been in an uptrend already or even more sideways, I would have went in here, okay? But now I'm just waiting I'm just looking for an entry. So when we get a retracement, the RSI in this case comes back, goes up like that, that's what I'm looking for. I'm not going to short this is my point. When I get a trigger short at some point, I'll be excited that finally we're going to get a little bit of retracement to take the long. Again, look at this for Adobe, folks. You're going to go higher till July. So again, you could do a straight call and a good entry, you know, for 5-6 months out. You can make what, 200, 300% possibly. That's where I go for some home runs. Again, 80% of my trades are usually debit spreads. And then the other 10 to 20% will be my home run hitters. Okay? That's how I trade from the option standpoint. Okay? So again, just waiting now at this point on Adobe for a re-entry, for an entry, okay? Because I missed that one. All right, APD. So again, here's an example on Air Products. Let me blow this up for you first. So you can see from a pure seasonal standpoint, right? Once you especially get into January, we're at our bottom in January, this thing's heading higher. So again, what I'm hoping at this point, I hope we get this nice retracement, maybe to the middle band, okay? Maybe to the middle Bollinger Band. Then when I get a trigger long, I'll take it, okay? So I don't worry about the short plays right now because most of those you won't make money on. You'll luck out on a few of them, but how do you know how much this is really going to retrace, right? How much is this going to retrace? We don't really know. We don't know. So I'd rather wait for it to make its move, skip it. Then when we get the move back up, take that, okay? Like you could have taken right here. Okay, those are much higher probability moves. Don't have FOMO, folks. Don't worry about the fear of missing out. There's plenty of money to be made in the markets. Okay, here's another one, applied materials I want to show you. So again, I want to show you the seasonal side first. So when you're looking at a chart of seasonality on applied materials, basically it's kind of flat here. And then when you get into October is when you really start seeing the more nice move up, okay? So when you're looking at that, you get to October, right around October, right here, we had a trigger, okay? You should know with high probability this thing's going to go higher, right? That's how I trade, and that's how I send out alerts. And I catch these from a scan that I have that I'll show you, but that's how I do it, okay? So that way I can look at any market, and within seconds, as long as it's got enough data points, I can show you the seasonality or lack of seasonality on anything I trade. So again, if you're not, when I mentor students, what I tell them is, a lot of folks have been either brand new or they've been trading for years and years and years and have been successful trading. But what I tell them is, many cases, if you're looking to go long something or short something, if you're just not sure, if you know the seasonality of something, your odds are going to be higher going in that direction, right? Which is common sense, okay? And that's what's important. Again, why would I want to short applied materials for a play right now? Okay, if we're lucky enough and it does come back down here, right? It had earnings, so it gapped up, okay? And yes, by the way, a lot of folks that know seasonality will get in before earnings, knowing that typically because the data is telling you it's going to gap up. There's games that, as companies play so they make themselves look better. You can make money on that. I don't do that. That's more riskier type trading than I do. But those of you that like to turn on the Rocky Balboa song theme and get going, there's a way to make money that way as well. Okay, that's just not something that I do. All right, let's take a look at Eaton. So again, first thing, look at the seasonality on Eaton. Okay, once we get to December here, folks, wham. Okay, everyone agree? The next couple months are bullish in Eaton. Okay, well, look at this. That's what I wanted to show you. We had this retracement. So even in a nice uptrend, you get retracements. Okay, no trigger yet. I'm being patient here. Okay, no trigger yet, but we're close. And the market is heading down today, and it looks like it's going to close possibly up, right? That's pretty bullish, okay, on Eaton. And this goal line is fractal energy, just saying that now there's a lot of energy coming into this market. So if we get a trigger the next day or two on Eaton, okay, this could be a nice move up, folks. Nice move up. And we already know that from the stock market standpoint, we should be bullish the next couple of weeks, right? That's what I showed you at the beginning. So again, that's what I look at, type of trades I take. All right, let me just give you some more here. I'm going to go over into futures a little bit here. So if you trade soybeans, once we get into right here, we tend to bottom right at the end of December and look for a nice long play. So again, futures traders that swing trade, how powerful is that to know that, right? September, let's back up here for a minute. Again, this data doesn't lie, right? So September, we start looking for longs on soybean. So let me clear that out for you. Blow this up, down a little bit. Okay, so I just draw the line when the trigger happened, okay? And then you can see this nice move up. So however you want to play it, my point is this move up had high probabilities based off of seasonality, folks, okay? Based off of right here. So again, we're having this normal decline now. Soybeans has been following its true seasonal very, very well, shaping up for a great entry going into the new year, okay? Yeah, you'll receive, Femi, you will receive the replay of this webinar. Yep, yep. Okay, live cattle. Come on, I know you want to trade live cattle, don't you? That's been your dream. You want to go to a party and tell all your friends that you're trading live cattle. I know that. I know that. But in all seriousness, so again, we're getting to a bullish time frame here. We basically bottomed right around August at some point, okay? So you can see we're real price bottom. And then you should have been looking for longs, right? And then when we get to March, I mean, look at the power of that. When you get to March, then you want to go short. But until now, you're looking for longs, okay? So look at this chart. Look how beautiful this chart is to the upside following that seasonal pattern, okay? The actual entry you got in there and stayed in there, right, was right here. I mean, it doesn't get any better than that. That's a lot of money in the futures market, folks, okay? Now, from a data mining perspective, though, the last 2 weeks of December is a good short, okay? So we've been in this really strong uptrend. So those of you, just look at, those of you who don't even trade futures but have access to it, just put live cattle on your chart now. And keep an eye on this. In the last 2 weeks of December, see if we have a nice decline here on live cattle, okay? We've been in this kind of flag motion sideways right now. Is this the top? I don't know. We may head back higher, then roll over a little bit more, okay? But knowing that the last 2 weeks of December are pretty bearish, I'm not going to take long triggers during that if we get them, okay? That's the point. You can use seasonal data to give you the highest advantage in your trade, okay? But there's been no surprise here that we've been heading higher on live cattle. All right, gold. So gold triggered a little early long here, okay? What I want is gold to head lower right now, okay? And typically it will. So it should head a little bit lower here, okay? But once we get, folks, let me bring up this chart. Let me blow this up for you. This is important. So once we get right here, give or take a week, right? First, second week of December, any time going into December is a great time to buy gold, right? You can do option plays on GLD. You can trade the futures, any stocks that you like that are related to gold, okay? This 2 to 3 month move here can make you a lot of money, okay? Just wait for the entry. Wait for the entry. It's one of my favorite plays every year. Yeah, sure. So let me show you last year. I can do that. Let's see here. So I'm going to go back in the charts. Let's see. I think I gotta. Let me go back. One year. Okay. So this is gold last year. You can see here, we bottomed here right in the end of November, okay? And then we had this move up, okay? Very seasonal. Gold's very good from a seasonal play. Let me go back to current price for you. All right. So Aussie Kiwi, again, I want to put a couple forex pairs in there as well. What I look for is a December a short. So this triggered short a little early. Again, I'll go in 2 weeks early on forex pairs as well, okay? But here was the trigger short, which was actually after this, okay? So I didn't, and I wouldn't get in. I wanted to retrace a little bit to the middle band, okay? But again, from a seasonal perspective, it's doing what it should be coming up doing, okay? What I did like, though, is this, right? See that double top? I mean, price hasn't been breaking that 1085. So, you know, you could have, there are traders that will aggressively go in once you know, with a more aggressive indicator, okay? But again, just following that nice seasonal pattern. Many of you had no idea I'd be talking Hong Kong dollar today, right? If you look at some of my public videos on YouTube, I love to trade this pair, okay? And I know the spread's not the greatest and so forth, but you can do really well here. So for one, okay, right here has been a lot of support and resistance, I should say, okay? And price doesn't break above 785. At some point, I'm sure it will, but whether the government steps in, you know, or whatever happens. So when we get up to these highs, close to these highs, folks, and I get triggers, I'm going to short it every time. And yeah, I was in it for a while, then I made this nice move. Okay, same here, same here. Okay, but now let me show you the seasonal move in theory that's coming. Okay, so we're right here. We're right here. So it's basically saying we're going higher now on US Hong Kong dollar, right? Y'all agree? We're at a bottom in theory from a seasonal perspective. So what I like about the chart, you go back to the chart, what are we doing right now? We're consolidating, okay? We're consolidating. I actually did a trade in the alert service. It wicked up, it only hit profit target 1 up here. Okay, it was a small trade because I was hoping to get a runner. And then the second portion of my trade got stopped out today. So I made money on the trade, but I was hoping that would have been the start of the runner. Okay, but I'll get right back in. You know, when this triggers, I did an early trigger trade. When we get a trigger here, folks, you can expect this to head back up to here. So you got all this room to make this money. Okay, so there's just some beautiful trades that happen, you know, year over year. All right, US dollar Swissy. So again, I just wanted to show you what's coming up here on the US dollar Swissy. Okay, look at this. Falling off a cliff right before Christmas, right? See that? And it's only, you know, for the week of 12/23 to 1/13. So it's a 2-week short. So short's the second week of December through January. Okay? So again, knowing that on this pair, US dollar Swissy, okay, and what I do like about this from a technical, right, we're kind of getting this trend line, we're getting wicks, but I'm hoping this continues higher, maybe retest this top band, then we'll look to short, okay? I didn't take this short, but when we get our next short, I'll be taking it, okay? So that's just some examples that I wanted to share with you. Okay. Let me delete that. Okay. All right, so before we get to that, let me actually go back to my scanner here. So I'm going to blow this up just to show you. When I'm looking for trades, okay, what I've created was a script that has the RSI trigger. So when something triggers on anything above 0.8, I'm sorry, below 0.8, so less than 0.8 or greater than 0.2, it'll show up here for me. Then I can take a look to see, is it meeting my criteria with the Bollinger Band? And obviously, is it meeting the seasonal, which is a must for me, okay? So when I'm doing a trade, and the cool thing about Thinkorswim, okay, whether you love it or hate it, so let's say you want to look at, let's say you want to look at analyst downgrades for whatever crazy reason, okay? You click on it, it's now giving you the ones that triggered based off of that criteria, okay? So again, for Ash, it triggered short right here. Okay, let me just show you. Right here, that's what this scan does. And it keeps it short on the scanner for two days, and then it goes back to neutral, okay? But again, when you look at this then from a chart perspective, this is saying we're going to bottom around 12.16 and then go long, right? So I'm not taking this trade short. I'm not taking it. Okay. I just wanted to show you the power of that because, again, you can look at, let's say you wanted to look at only the S&P 500 stocks, okay? You see it's loading here. You see that? And then I have it sorted, and it gives you the potential long opportunities, okay? That's how I find trades pretty quickly and send them out in the alert. Okay, so here's an example where on Apache, let me just expand the seasonal first for you all. So from Apache, I see this as more from a seasonal perspective. Right, remember, right here is current price. Yeah, I see it heading down maybe next week or two, then having a move up, then down. I don't see a huge seasonal advantage is my point to this. Okay, I like seasonals like this, or like this. Okay, this is more sideways. So you can trade ranges. Okay, so you could absolutely on a long trigger, for example, take it up to the top band and then get out and then take a short. You know, you can do that. The key is that you know from a seasonal what it should be doing. Okay. All right, so let me bring up the spider. Okay, so again, just from a seasonal perspective, we talked about, right? We're bullish, we've been bullish, at least I am. Retailer traders are bearish. So you can see what's happening today even. Okay, look at this. News came out, it started heading down, and how strong it is, it keeps wicking, right? But again, going back to the slide over the next couple of weeks, right? The odds are market's going higher, right? Is it guaranteed? No. You're like, I mean, and think about it, folks. I'm in here in a live webinar telling you with high likelihood the market's going higher. The reason I'm doing that is because data doesn't lie. Okay, if it doesn't work out, we did our best. We did our research. Okay, but more times, way more times than not, okay, this works out. So you can see it's just kicking right back. But anyway, so if I was going to do a trade on this, okay, here's two ways to trade it. I told you I would do a simulated trade for you again, because again, trade at your own risk, folks. But I like to look at debit spreads. Let me just show you a very simple technique. Okay, so I like to go out roughly 3 weeks. Okay, so let's just do 23 days. Let's grab the December 13th expiration. I'm going to circle that first so you can see that. Okay, and what I like to do is I like to go right in at the money. The last shaded one. Again, this is the call side because I'm looking for a long. So I'm going to go in right at the 310. Okay, right here. Okay, let me clean that up and then go in there. I'm just right clicking on the, and you're going to get the midpoint. So I'm just right clicking on that. I'm going to buy the vertical. Okay, so the 310, 311, let's put one contract in there. This is just a paper trade account for training purposes. Okay, and typically what I look for with the dollar spread, okay, 310, you're buying the 310, selling the 311 simultaneously. For a dollar spread, in most cases, folks, I like to get 55 cents or less. Okay, the less the better. Okay, but I know what's coming up in the markets the next 2 weeks historically. Okay, so if I wanted to get in and get filled, I would go in right at the price they're giving us at 64. Okay, so that's how I would place that particular trade. Again, I would just hit confirm and send. Again, what you can see is, you know, gives you your break even, it gives you your profit and your potential loss. But what I do is I get out at a 50% profit or a 50% loss roughly. Okay, and you're going to win 8 out of 10 of these historically. Okay, but this is a really cool trade you can do, you know, knowing that the market should be pretty bullish over the next couple weeks. Okay, now also let me give you another idea. Let's say you're bullish till the end of the year because we looked at that slide, right? So let me clean this up. Another way to play this is to do a straight call till the end of the year. Let's say until December 27th, okay? And I like to go right around for that type of trade, right around the money. So I'm just going to grab the last shaded one for consistency, which is showing the 310. Again, you can buy the signal. Okay, take the market price. Okay, and again, you can look, break even is 314.52. Okay, the odds that this thing is going to break through that between now and 2 weeks are extremely high, right? I showed you that. Okay, that's why you can take some of those trades. Okay, so again, trade at your own risk. I just want to show you some of these trades and how I execute them. Okay. All right. Somebody also wanted me to look at ETFs. So what you can do here is you can go to the S&P. You can go up here and go to public, all ETFs. So let me look at a couple of ETFs that are given triggers here. So let's look at And by the way, what the yellows are, when you see this yellow, that's the one triggering at either 0.1 or 0.9. They're more aggressive. There's just more of a heads up. Okay, just more of a heads up. But let's take a look at, let's say AFK. No idea what that is. But we can find out if they have a seasonal pattern. Okay, so when you look at AFK, VanEck Global ETF, what it's telling you is we're right here. We usually have a dip and we bottom right here towards the middle of December. Then we head long. Okay, so again, you can look for a dip. If you get a dip, you can look at taking it, or you can wait and take a long play, based off of that seasonal pattern. Okay, so yeah, so you can do it about anything you're looking for. You can scan for it. Okay. Okay, so let me bring up, so if you're interested in the alert, and again, that's not the purpose of today. I really just wanted to educate you and give you some bullish moves that the odds are by far in our favor by taking long plays. Okay, but if you are interested in the alert service, let me bring it up. Sorry about that. I'll put it in the chat as well, but these are my, and again, they're risk-free. It's $1 for 2 weeks, folks, just to make you put your credit card in there to show some sort of ownership. But I'll also put it in the chat, and you can always go to the website as well, okay? And yes, I'm offering a special with Black Friday coming up in the holidays. If you want some of that mentoring, I'll put that in the chat. It'll be in the recording as well. If you're interested in any of that information or the data mining, go to the website. And again, all you need to do is go to, let's see here, let me bring it up for you. Bear with me. It's seasonaltraderpro.com. That's my website, but I will walk you through that real quick. Let's see here. It's funny because I don't even have my own website bookmarked, right? Okay, so let me bring it over here. You should be able to see it here as it's coming up. Okay, so if you go under there, you go to the seasonal trading, you can see the one-on-one mentoring, you can see indicators, the data mining, the alert services, and I have a cool new service coming, future spread things. We'll have a different webinar for that. But anyway, right under the seasonal trading from seasonaltraderpro.com, you can look at that as well. Okay. So again, let me bring back up the slides. But if you have any questions, you can contact us, support at seasonaltraderpro.com, call us, Facebook, text us. But again, I hope you enjoyed it. I want to start doing this more. You know, my goal is to really plan for spending more time with all of you, because I think education is important. I don't like to get emails from people that have blown out their accounts. So my belief is if you at least know how to get to the data, you have more informed decisions that you can make. Okay. And the cool thing about Thinkorswim, right? You can open up a free account and you can use the charting for free if you don't want to use them as a broker. Okay. Granted, now on the option side of it, you don't have to pay commissions anymore, right? So I use it pretty much for everything. But if you're interested in the indicators or anything like that, you can just open up a free account, use that as your charting, and then still keep your broker for your trade. That's what a lot of folks will do, okay? All right, folks. Well, again, I hope you enjoyed it. This is being recorded, so we will send that out to you all and post it so you have it. And again, I'll look to see you all around soon. But if you have any questions, send me an email. Other than that, folks, hope you enjoyed. Best of luck and go Bulls, right? We should definitely see some moves up here on your favorite stocks with triggers, following those seasonal patterns the next couple of weeks. So keep that in mind. I wish you all the best. Take care now.